Happy Friday, traders. It's 8 a.m. Chicago time on Friday, the 28th of June, 2019. This is it. The last Friday of June 2019 is just, the end of the month. Which brings me to the next key point is it's the end of Q2, H1 of 2019. Caution today, caution on reallocation, window dressing, all kinds of stuff into the close probably or throughout the session. Just be careful. There's likely to be some movement on a higher time frame today based on the fact that we are closing Q2 for this year. So just be warned. The other thing you need to be aware of is that next week is a next week on Thursday is a national holiday in the U.S. It is Independence Day, the 4th of July, and the markets are observing unusual hours. And so just make sure you're aware. And I do not intend to be here on Thursday. Hopefully, I'll be grilling something and the weather's nice. So just be aware that going into Wednesday, we're likely to have a really slow trade. And then Friday, pretty sure we're likely to have a pretty dead trade. So the markets will be open in modified hours, but just make sure you're not risking a lot on those days. Anyway, thanks for joining me on another Trader Bite. This is episode number 1546. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Today, the market has a slight risk-on sentiment. We are gapping up above the last 2 days range. The market's liking something, whatever's going on in the G20. It's seeing some potential for higher prices. G20s in focus, signs of any breakthroughs in focus for signs of any breakthroughs on trade. China President Xi says in a meeting with African leaders ahead of the summit, condemned protectionism and bullying practices. Trump touts expecting to announce very big trade deal with both Japan and India. Market likes that. And European June inflation data continues to improve from month ago levels. Those are the highlights as we come into today. The leader this morning is the DAX. The DAX is up 57.5 points, trading at 12,320, up 0.46%, followed by the Euro stocks, the cable. The Dow is up 86 points, 0.32%. The S&P is up 7.75 points. Again, the S&P is gapping above the last two sessions. The laggard today is the bonds. The U.S. bonds are down 11 ticks, followed by the 10 years, which are down 6 big ticks or 12 small ticks in the futures, and that's where we stand. It would be really cool. I try to remember to do this about once a month. It'd be really cool for anyone listening, either live here in the chat window in front of you, the YouTube chat, or in the comments if you're watching this after the fact, to just type in your city, province, state, or county, or whatever, and country. If you can just type that in, that would be really cool. That would give us an idea of how global we are, and maybe two people are close enough that they can meet. That is one of the key mission statements of Convergent, is to connect people. Remember, converge means to come together, and that's the whole point of this process. So take a moment and punch in your Beirut. Awesome. Punch in your city and country, city, state, and country, or whatever you like, whatever describes you, and that would be cool for everybody else to see. So, as far as what we've got ahead of us today, I mean, we did have some key figures come out overnight. Spain GDP came in at 3 a.m., inline 2.4%. And then GDP growth rate Q on Q in Great Britain came in at 0.5% in line. and year on year at 1.8% in line. Personal income, personal spending were released in the U.S. Personal income came in quite a bit higher, 0.5 versus 0.3%, and personal spending came in at 0.4 in line. We're looking for Chicago PMI this morning. Remember, Chicago PMI actually comes out early to subscribers. And so if it does come out early, then it's likely to come out at 8:41, 8:42 Central, 9:41, 9:42 Eastern. The rest of the market gets it at 8:45. What does that mean to you? It means that you are likely to see a flutter based on that number, and it does move us sometimes. If you see a flutter based on that number, it's likely to be around that time. So just be aware if you're opening a position or just opened a position that this is coming. Okay, that's at 9:41:42 a.m. Eastern U.S. time. And then finally, we get U.S. Michigan sentiment. This is the final figure, not the prelim. It does not have as much of an impact. That's at 10 a.m. 10 a.m. Eastern today. Let's take a look at what we expected yesterday versus what we got. Yesterday, the primary expectation, which some of you might have seen my tweet, pretty much worked out perfectly, and that's really not the intent. The intent here is not perfection. If you're seeking perfection in trading, you're seeking suffering, unending suffering. Don't look for perfection in trading. And so the primary expectation is a push to 29.30, 29.30 right here, and then I was looking for a drift down. The drift down is likely to push into the prior days or the low from 2 days ago around excuse me, around 29.20 or so, and then I was looking for the market to climb back up to 29.31.32 and finish in the middle. Okay, so up to 30.31, down into 20, up into 31.32, hold in the middle. This is scenario one. That's the scenario that worked out almost to perfection. Here's what it looks like. We open, we push up into 30, we pull back, we push up into 32, we pull back into 23 or 22 instead of 20, consolidate down below, push back up, new highs. We have a neutral day, pushes to 33.50. The numbers, the highs and lows are not perfect. They're not expected to be. I don't have a crystal ball or anything, time machine. However, the overall stance is an open auction grinding up, rotation down, test down. Buyers come in and take this up back to the high, and it finishes somewhere in the middle. And that's pretty much what was outlined in this scenario here, this mess of a scenario. And so that's where we ended up with yesterday, an inside day, a very weak high. If you look at the market profile, here, you'll see that we ended up with a double TPO high. That's 2 half-hour blocks with the same high, but we also see it. I prefer to see it better in volume, and you could see that the two highs peaked. It's not really a double top, but two highs peaked, and then the profile appears to be skewed to the buy side, appears to be unfinished and likely to continue higher. In either case, we did have another neutral day. The market's put in quite a few neutral days over the last week or so, and it's what's called capitulating. And so today we are opening right in that 29.38.50 area. We put in a high of 29.39.75. I do have a stock zone at 40.25, and overall we're opening above these last 2 days of what looks like a market that is bouncing. Now, those of you who watched yesterday, I talked about how even though we had a lower high, lower low, what did I mention? What did I point out? The thing that you can only see with volume profiling and is not easily discernible by price action alone. That thing is the point of control was in the prior day's low, so we expect a continuation lower, which we got Wednesday. But the caveat here is that the most accepted price, the point of control, moved higher. As price moved down, the point of control moved higher. And this generally, not always, but within a pretty reasonable likelihood, we're looking at a market that is stabilizing to the opposite side. So this is the same as when we finished the point of control higher up here, and then the next day we have a lower point of control on a higher high, higher low. We tend to then capitulate the next day, the day after that, and potentially rotate. And that's really important. So yesterday we ended up putting in another higher point of control. The point of control is inside the prior day's value, telling us that price is being accepted higher, but in balance, and we ended up with a neutral day up. In other words, we broke the IB low first. Well, this is a neutral normal day, but we broke the IB high low first, and then we broke the IB high later and held somewhere in the middle. Completely balanced profile yesterday. The value areas are valid. Okay, so that's where we ended up. Here's what the overnight looks like. The overnight session looks just really not all that healthy really in terms of balance. 155,000 contracts traded, which is within what we would call normal, but compared to the day before, it's a little light. What we see here is a profile that looks incredibly incomplete to the upside. I mean, it just squeezed up into that 2940 and just could not push any higher in the overnight session. We have basically two tops, two ticks apart with an attempt to push through the prior close and unable. We're above the mid, above VWAP, above the prior day's range and holding steady. This is a legitimate weak high in the overnight session, and the inventory is long and in price and in delta. All right, so let's take a look at what we're expecting for today. But you all know it is like Friday, right? Every Friday is like Friday. And like Friday asks kindly to take a moment and find the thumbs up button, the like button on YouTube, and to hit it. I ask you to do this just once a week. Once a week. That's it. So please do that. Take a moment to find the like button before you take off. If you're on the YouTube page, all you have to do is click below. If you're on the convergenttrading.com page, then just follow the YouTube link at the bottom right corner of the screen of the video that takes you to the YouTube version and hit like there. You may need to log into your Gmail account. So what are we looking for today? Inventory is long. We are just above the 2 days, the last 2 days. The expectation is an open auction out of range that becomes responsive. I'm looking for a retest at 29.30. The 29.30 area, I'm expecting it to stabilize. I'm looking for an impulse higher to push into 29.40 and make an attempt at taking back some of this selling day, this trend day. We've pulled back a good portion of the way, but I'm looking for a test lower for the market to rebalance, and I'm looking for a bounce. I'm looking for what I'll be looking for is if the move down brings in a stable bid that continues to buy the market, forcing the rotation up, forcing the squeeze of the sellers. That's what I'm going to be looking for today, and I'm going to look to get long on any pullback. That's the first scenario. The second scenario, I do expect a pullback here rather than an open auction that is out of range that flags high and continues higher with a gap, although that's very, very possible. The secondary is an open auction, pulls back a little bit, impulses up, holds steady at 40 for a bit, and then starts to attack that 29.45 area, which is where the thin portion of the profile occurs, the singles, the excess singles start from Tuesday's selling day. And so this is a stronger buy signal, but I expect that, I expect that it's like once it achieves that, it's probably likely to grind quite a bit into Friday, which again, for those of you who missed it when you first came in, it is month end, Q2 end today. And we're expecting to see some window dressing and some reallocation and so on into the close. The close is likely to be very pushy. Higher time frames operating on the close, very, very likely you will not want to fade that. Okay. And so the tertiary plan is we open up, we push above this 40 and we get the impulse down, which brings us back into the 30, brings us back into balance, and then we finish somewhere in yesterday's range. Not expecting that to happen given the way we've built the VPOX higher, not expecting this to happen, but it's a strong possibility that we're likely to continue to do this. A couple things I wanted to show you before we go is one of them is the state of order flow. This is yesterday right here. Yesterday opened right here. This is yesterday. This is the overnight session that we're in today. And you can see already what's being stacked in the order flow beneath us. 29.20, 29.35. 29.35 is likely to be taken. If we look above to see what's been holding there most of the night, you'll see that the levels that I just talked about, 29, 44, 45, as the key areas of resistance that have been here all along. Everything else has kind of come in and out and in and out. So those are the two that I'm seeing a lot more on the offer than the bid. And overall, just pay attention if we're coming into 29.44. 45, that is a stock zone for me. You can see the stock zone is starting right there. So that's an area for me to engage if it gets up there. Okay, so that's what we've got. Somebody asked for a market profile. Here's your market profile. There you go. That's your MP chart. You can see that the excess starts right there. So I'm saying that that's the area that's likely to get tackled by scenario 2. Okay, that's all I've got. Thank you all for coming in. Don't forget to tell us what city, state, and country, or what city and country you're in. Thanks for joining, and hopefully you're gaining something every time you watch. Take care.